artificial intelligence and Bitcoin or crypto are kind of the two big areas where the future of finance is. What I believe is going to happen here is I think that AI and AI agents are going to be offense. They're going to go out and they're going to make money for these companies. You're going to start to see AI applied inside of these financial firms, and they're going to start to automate away tasks and then eventually jobs. And they are going to be that offensive force to go and drive revenue. But then what's going to happen is that these companies are going to take that capital and they're going to go and they're going to stick it into crypto on their balance sheet. You can think of Bitcoin and crypto as the defense and actually protecting that purchasing power. Now, what I find very interesting is that that defense, some of it's going to be Bitcoin, some of it's going to be stable coins, some of it may even be tokenized gold. But I think that this combination of these two technologies is really where the finance is going. And you see it from the startups, but also you see it from the large firms like BlackRock.
And how long? For years?
I think that you're going to see these companies start really announcing stuff over the next 6 months.
I think we're be 500 to 750,000 Bitcoin. I think 2026 and 2027, this is the meat of the money printing. The Trump administration is going to do what they know how to do best, what every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you.
Anthony Pompliano begins with a broad look at the evolution of crypto and traditional finance. Bitcoin may be down for the year, and investors often fixate on the 30% drawdown from its highs. Yet, in the bigger picture, Bitcoin has compounded tremendously over the last decade, growing at an approximate rate of 70% per year. Over the last 2 years, it has doubled. Over 3 years, it has nearly tripled. The volatility that makes Bitcoin scary for some is also precisely what drives its outsized long-term returns. Pompliano points out a significant development in the market: the rise of everything exchanges. Coinbase, for instance, is moving beyond cryptocurrency to allow trading in public stocks, crypto derivatives, prediction markets, and perpetual contracts, all on one platform. Robinhood is doing something similar from the brokerage side. Traditional financial institutions, meanwhile, are also entering the fray, with leaders like Larry Fink highlighting artificial intelligence and tokenization as two pillars of future finance.
Bitcoin is now down for the year and down 30% from its highs.
You know what I think is happening here is I've been an investor in Coinbase since the private markets, and one of the things that's really interesting is they're going after this everything exchange. They basically want you to be able to buy public stocks, crypto, prediction markets, perps, everything on one exchange. But also, if you see Robinhood is doing the same thing. Coinbase came from the crypto side, Robinhood came from the brokerage side. You also are starting to see now the traditional exchanges and the traditional financial players. Larry Fink recently said that artificial intelligence and tokenization are the two big themes of finance going forward. Right. So what's going to happen here is everyone is going to meet in the middle. They're all coming from different areas, but ultimately they are all fighting for who is going to live at the center of artificial intelligence, crypto, and ultimately these everything exchanges where people can trade whatever they want, whenever they want, 24/7. And so I think that the key for public market investors is trying to figure out who's going to get there first and who actually has the most durable business. Now, Coinbase has somewhat of an advantage. They have 100+ million users, and they've come at it from a crypto-friendly standpoint. Many of these technologies are using that crypto plumbing, and so having kind of a head start in the crypto side is going to be a big advantage. But I would not discount the traditional players. These people have a lot of money, they're very ambitious, and they understand the regulatory apparatus. And so you're going to have this kind of cutthroat competition, and ultimately the winner is the individual investor or the individual citizen, because they're going to get lower prices, faster market access, and ultimately better pricing on these different opportunities.
Bitcoin was 125. There were people talking about 150 by the end of the year, or even higher than that. And then long term, over $1 million a coin. It hit a bump in the road on the way to some of those numbers, right? Took a wrong turn at Albuquerque or something. You point out what, it's up 100% in 2 years?
Yeah, I mean, look, I think that there are a lot of Bitcoin investors that are disappointed that Bitcoin did not go to 150, 200, 250. I mean, take your crazy number that people were predicting. At the same time, we have to remember Bitcoin is up 100% in 2 years. It's up almost 300% in 3 years. It has been compounding. The compound annual growth rate of Bitcoin over the last decade is 70%. This thing has been a monster in financial markets, but it has volatility. And so one of the aspects of Bitcoin that people aren't talking about is that the volatility of Bitcoin has actually been coming down. And so we didn't get a blow-off top that I think people expected in kind of the end of Q3 or beginning of Q4, but we also haven't seen the big 80% drawdown that people normally expect as well. Now, who knows what's going to happen in the future? You could see the Bitcoin price go down a little bit more, or you could see it turn around and start to kind of grind up going into the midterm.
Could you see it go down a lot more? You said a little bit more.
You could, but I think given where the volatility is right now, it would be very surprising that Bitcoin's volatility has drastically compressed, and yet still you could get a 70 or 80% drawdown.
Well, the charts were in the 70s that Katie Stockton talked about. That was when we were still over 100. She was talking about after the first break under 100, I think.
One of the most interesting kind of theories, if you will, that I've heard is Matthew Siegel, who's over at Van Eck. He basically explained, he's like, look, if Bitcoin's volatility got cut in half, then rather than get an 80% drawdown, you would expect something like a 40% drawdown. That's about what we got from the $125,000, $126,000 price point down to around $80,000. And so, again, does that mean that's what's going to happen? Not necessarily, but I do think that this compression of volatility means that the holders will be a little bit disappointed on the upside because you're not going to get those blow-off tops, but also there is some degree of safety or a persistent bid on the bottom side where you're not going to see these huge, 75, 80% drawdowns as well.
So what is that hasn't happened yet can happen for Bitcoin, either with regulators or Washington or I don't know, security-wise, more adoption, sovereigns. What's the next? There's nothing on the horizon, really. Is Washington still matter? Do you need that legislation? We don't have it yet, right?
Again, if we go back to this idea of artificial intelligence and Bitcoin or crypto are kind of the two big areas where the future of finance is, what I believe is going to happen here is I think that AI and AI agents are going to be offense. They're going to go out and they're going to make money for these companies. You're going to start to see AI applied inside of these financial firms, and they're going to start to automate away tasks and then eventually jobs. And they are going to be that offensive force to go and drive revenue. But then what's going to happen is that these companies are going to take that capital and they're going to go and they're going to stick it into crypto on their balance sheet. You can think of Bitcoin and crypto as the defense and actually protecting that purchasing power. Now, what I find very interesting is that defense, some of it's going to be Bitcoin, some of it's going to be stable coins, some of it may even be tokenized gold. But I think that this combination of these two technologies is really where the finance is going. And you see it from the startups, but also you see it from the large firms like BlackRock.
And how long? For years?
I think that you're going to see these companies start really announcing stuff over the next 6 months.
Arthur Hayes approaches the conversation from a macroeconomic and geopolitical perspective. For him, Bitcoin's trajectory is closely tied to government deficits and monetary policy. The upcoming U.S. elections in 2026, he argues, will guarantee substantial money printing, regardless of which party wins. Politicians across the spectrum promise goodies to secure voter support, and these fiscal measures are financed through the expansion of the monetary base rather than taxes. The fiscal outlook is staggering. Hayes cites projected U.S. deficits of $2.2 to $2.5 trillion for fiscal years 2026 and 2027. With non-U.S. central banks buying fewer treasuries, the Fed and U.S. Treasury will have to accommodate these deficits through liquidity injections. This environment, massive liquidity and monetary expansion, is historically bullish for Bitcoin. In Hayes' view, the only real limit is social cohesion and purchasing power distribution within the U.S., but the systemic tailwind remains strong.
And 2026, I think that Bitcoin and Ethereum will do very, very well as liquidity improves, and at least the United States and maybe China will follow suit as well. The U.S. has an election coming up. It's time for both political parties to hand out goodies, especially the Republicans. They're the ones who, I think the Poly market puts their odds something at losing the House at like 60% or something like that. I don't know what it is now, but it's over 50%. The market expects the Democrats to take the House. I don't know about the Senate. I haven't looked at the odds. But the only thing that's going to stop that from happening is Trump and his administration just give out a lot of money, print it, give the goodies out to their supporters so they show up at the polls in November. Doesn't matter who wins, because both sides promise goodies, right? The Republicans promise goodies. The Democrats promise goodies. Goodies are paid for with printed money. It's not paid for with increases in taxes to a large extent. And so therefore Bitcoin benefits. Obviously, if you're a stock picker, it really matters who wins, right? Democrats like climate activism, social justice, these types of things. Republicans like drill baby drill, AI, all those sorts of things. And so picking a stock that benefits in one of those buckets, really depends on politics. I have no idea. I'll just stick with Bitcoin. It doesn't really care who wins in November, because they are both going to print money. And I think that Trump knows that odds on favorite they're going to lose. He's going to have to accelerate the money printer and make sure that all of the relevant government appointees get in before a possible Democratic Senate, and they just basically stonewall him for the next 2 years and don't allow any of his appointees to get confirmed. The U.S. Treasury publishes this thing called the quarterly refunding announcement. And if you're a serious crypto trader, I think you should make sure you read that 4 times a year. The most recent one came out on, I think, the 3rd or 4th of November. And for the fiscal year 2025, which ends in end of September, 3rd quarter of September, the U.S. federal deficit was something like $2.3 trillion, right? And so then that was what happened. We care about what's going to happen. The relevant, either the banks, the government itself, they all estimate that the 26 and 27 fiscal years will be in the range of $2.2 to $2.5 trillion deficits. So if the deficit and the financing of the deficit by the Treasury and the Fed was what drove Bitcoin higher and crypto higher, at least in a dollar liquidity context, that situation is going to persist and only get worse because central banks, at least non-US central banks, are buying less and less US Treasuries. I think there's a chart going around that shows the percentage of gold as a reserve asset of non-US central banks is higher than Treasuries for the first time in a long time. And so without these foreigners buying this debt, it relies on the US government to print the money in some way, shape, or form. There's lots of different games that it can play, and you can get into the minutiae about how the money markets work, but from a high level, it doesn't really matter. If the politicians are not going to spend less money, then the Fed and the Treasury have to print it. So you tell me how much money that the US government's going to print, I'll tell you where Bitcoin is, or give you an estimation of how bullish I am. And if they're going to 2 trillion plus deficits, and it could get worse if there's a recession or a war or what have you, then Bitcoin and crypto are going much higher.
If Bitcoin hits $1 million anytime soon, it's actually going to be very worrisome for the US economy. It sounds like you are right along those same lines of thinking. If Bitcoin kind of goes to the moon within the next year, we have bigger fish to fry.
I mean, I don't know if there's going to be a problem per se. It's just, purchasing power will be diminished. It really depends on social cohesion within the United States and how people handle that, and what percentage of the population owned the asset that went up a lot and which percentage didn't. Do food prices go up a lot? I don't know. Do rent? Do all the different things that the majority of people care about? Maybe nothing. There is no inflation in food, and it's just the Bitcoin financial asset goes up. I don't know. So, not necessarily mean there's going to be some sort of like societal breakdown just because Bitcoin's at $1 million. I mean, it'd be different if you said that inflation is going to concentrate on beef and a pound of beef is going to be $150, right? There'd probably be a revolution in the United States if that happened. I think we're be 500 to 750,000 Bitcoin. I think 2026 and 2027, this is the meat of the money printing. The Trump administration is going to do what they know how to do best, what every government knows how to do best. When in doubt, print the money. If the people are unhappy, print the money and hand them a goodie. And they're going to show up at the polls and hopefully vote for you.
What do you think the biggest trend of 2026 is going to be when you look at the crypto industry?
I think stablecoins are still going to be a massive trend. I was speaking with a digital asset head of a large TradFi bank, and he was telling me that all the GSIBs, the globally significant banks around the world, are getting together and they're going to launch their own stablecoin, right? And so I think that'll be a big deal. And he said it's, they're working very, very quickly to get something out there, maybe next 6 to 12 months. So I think these are the sorts of things that are really going to accelerate adoption of crypto and get people understanding how a wallet works. Right now, we all understand how online banking works, right? I think even my mom could probably use an online banking app. And that takes a lot of learning for people to, I'm not going to go to the branch. I'm going to, get on this phone and there's not going to be a human talking to me. And I'm going to do all these things on my phone, which is not how you've been doing banking for the last, 500 years. So how do we get people to transition to, okay, now I'm not going to go to the branch. And now, what is a bank? I don't even know. I guess I have this like dollar, yen, euro, yuan digital thing, and I move it around. And there's this whole other ecosystem that's not connected to the banks. And there's all these other products that I can use and trade with. And literally, I just, a few taps on my phone, and now I've got my dollar, my yen, my euro, my Bitcoin, my Ethereum, whatever. It's all over on the internet. And so this is really the explosion of DeFi, when the everyday person has been habitualized to using these digital assets.
From where you sit, what's the biggest challenge for the industry that's still ahead?
Biggest challenge? I think people need to be patient. People need to not expect the present to be like the past. Like every interview that I do is like, oh, when is altcoin season? I mean, I had a great altcoin season. Hyperliquid, Athena, right? Like this is, Zcash. Like there's been a lot of standout performing altcoins that have made people a lot of money in this cycle, just because you thought that, you're just going to spray and pray on some dog shitcoin and it's going to go up 10x just because it's called an altcoin. Well, I'm sorry, the game changed, right? So you need to adapt.
The combined insights of Pompliano and Hayes highlight a key truth. The crypto market is evolving from speculative cycles to structural growth. Bitcoin's volatility has moderated, AI and tokenization are reshaping finance, and macroeconomic conditions provide unprecedented tailwinds. The opportunity for investors lies in patience, discipline, and understanding the broader trends shaping the market. Focus on durable assets, watch infrastructure developments, and recognize that adoption, not hype, drives long-term returns. Bitcoin and crypto are no longer just financial experiments. They are becoming integral to the future of money. For investors willing to think structurally, the next few years could be transformative.